Welcome to the Weekly Edge to help you master supply and demand market structure made simple. So we're going to go through now straight over to the charts. We're going to do 28 pairs, marking up those structures for you to see exactly how I'm doing it to help you master market structure and for marking up those areas of supply and demand so we can find the best trades for the coming week. Through the euro pairs, the pound pairs, the AUD, New Zealand pairs, US dollar pairs, the Canadian pairs, and finally that Swiss franc pair of the Japanese yen. 28 pairs there to go through, so make sure you got a nice beverage ready. It's going to be a long video, and let's start off with the monthly time frame. So I like to first look at my monthly time frame, marking up my structures. Now, of course, if you want to learn this in much more depth, I do suggest being part of that 90-day profit trading system. But you can join the waitlist. It's not currently open to enroll, but you can join the waitlist right now. There is a link below in the description of this video. So what we're looking at first is where do we see a break of structure here? Let's mark this off as a break of structure. So I'm going to do this quite quickly for you. I'm not going to go through too much detail. What you really want to be seeing is what's happening on the charts. And for an area of supply, we have a drop-based drop area of supply that I can mark out right here in the market. Okay, this is going to be a swing area of supply. We're bouncing off. Now I drop down to a weekly time frame. I may be going quite quick. The reason I'll be going quick is I want to get through these 28 pairs for you today. So this is what we class this swing structure. We have a break to downside pullback. Now within this move, we have the structure within that you can see. Let me just quickly identify this for you. We have these moves to the downside. We have the internal structure here as the market makes its move. Okay, we break out, pull back, and we start to run the week low again. So the idea is to understand your two types of structure here is a swing and an internal structure. So we have a break of structure here to the downside. Okay, we class this as an IBOS, and then we have another break here to the downside, which is now running the week low. This means now we've seen a break of structure to the downside. We could see a pullback at any time. We can also mark out this was our previous retest area of a supply zone. So we mark this out as an internal supplies. We had the swing area, we came back in, we made a reversal out of internal structure. We come back to retest that supply once. We failed to run the week low, came back deeper to run this high, and then we run the week low. So what that means now, we've created a new area of supply. I can mark out right here of an internal supply zone. So what we're looking for really is a pullback. But on the way down, we do have this drop-based drop zone as well. We can mark out area of supply. So again, it's an internal supply zone. So we have a couple of zones on the way down. We can see the market pulling back too. Now, we look at where price is pulling back within that leg. We can also draw out an area here, this previous high, as an area of liquidity. But we'll go down to a daily time frame, and we'll see what we can identify on a daily. So on a daily, we can now see a larger swing to downside here. Okay, from this swing high. And we have this high up here as well. This is going to be a strong high in the market. But we also have an area of supply up here. We haven't drawn out, we don't need to. But we also have this drop-based drop area of supply. So now we can see we're bearish, okay, based on the daily time frame. We're looking for continuation for this week low down here, but for now we're looking for potential pullback. Understand we just broke out of a swing low. Now if we go closer in, we're looking now for a potential pullback towards this internal area of supply here, or further up to this area of supply. Now on a 4-hour time frame, we've identified we just had this break of structure we can mark out. So this is going to be a 4-hour, find it, IBOS. And I can quickly mark out an area here of potential supply. Okay, this is where I'd like to just quickly mark out my zones. And we can look over to the left. Okay, if we go back to, also back to the weekly here, in fact, and we can identify where price, okay, made this internal move to the upside. So we have here a candle that we can mark out as an area of demand. So I can mark this out as internal area of demand. So you can see we've actually pushed through into demand zone. Another reason why we can expect a move higher. So now we're on our 4-hour time frame, and potentially what we're looking for now is a pullback into this area. Now the market is pulling back now towards this area of 4-hour internal area here. So mark this off this previous high. We got that from a daily candle. We could look, okay, based on a 4-hour time frame, we have a bearish structure in mind. Let's mark this out as a, oh, wrong. We just do that again. And IBOS. So we could look for a bounce from this area to fall to take that weak low. But what we have to realize now, we're sitting inside a larger area of demand on a daily. Now, you don't want to be taking trades inside a daily demand. We want to be looking to buy out of a daily demand, but we can sell down to the daily demand again if we understand what we're looking to sell towards. Now, based on the 4-hour time frame, this is my swing move to the downside here of that internal structure. So we have a break to downside, we'll pull back towards this area of potential supply, and we could see another swing move to downside. If we zoom out, get that word out correctly, zoom out to this area, we can mark off as well this low as a break of structure now. So we can mark this off as a 4-hour break of structure to downside. And again, we've broken through, we can expect a swing pullback. So I'd still like to see really a push through potentially at some point, pulling back into this area here, or this area of supply for another run lower. And it's going to give you more room as well to run back towards this area of demand to be broken through. And that's going to create a flip zone for us for an area of supply. Now, if you want to learn more on supply and demand, there is obviously the Profit Trade Workshop. There is a link I will leave at the end of this video if you want to check that out, and there's one in the description of this video. So let's now go down one more time frame just to have a look. Okay, we'll look at the 30-minute time frame. For this, we can see we have a base drop area here of supply. We can mark out. We'll mark that out as a internal supply. Okay, and then we have an origin area we can mark out up here of supply as well. And there is a zone, okay, we've marked this zone here, but we could even include the full high as well. And we have this previous high, which was acted as an area of liquidity in the market, where we're going to see it's marked off a 4-hour liquidity. We'll just run through, but price at the moment has this gap being created. We're holding that gap, and we could see a continuation higher. We drop down to 30-minute, and this gives you a couple of areas you can look for price to run into above within this area of 4-hour supply. We've got marked into these 15 or 30-minute areas based on the 30-minute time frame. So we've got an area of equal highs that we could roughly mark out here being created, where we have an area of liquidity, where we want to see the market potentially running through, look that off, to run into this area of supply above, where we could then look for a run for this low down here. So we have a potential, it's marked out as a IBOS. So we could look for a run through into supply above inside this larger zone, look for a reverse out to run for this weak low. Now remember, we're still sitting inside daily area of demand, so take caution, okay, if it's a type of trade setup you're looking to take. Now remember, this video is for educational purposes only, just to teach you the way I look at marking up my market structure, the areas of supply and demand. Now, of course, you can learn this in much more detail if you want to be part of that 90-day profit trading system. But if not, it's absolutely fine to continue watching these videos. It's going to help you to master those markets. But please do your own analysis. Just go through this video to help you understand the way I'm looking at doing my analysis. You need to do your own analysis. That's the only way you're going to learn to do this yourself. So that's the EURUSD, potentially looking for a sell to run for the week low. Just be warned that on a higher time frame, we are bouncing out of area of daily, and there is also back here we'll be able to find within this area a 4-hour area of demand as well. And that does mean that we could see price sandwiched at the minute, and we could eventually see price want to run through this area to eventually go back to a higher area of supply. So that is the EURUSD. Let's now go over to the Euro Great British Pound. Now we're going to speed this up a bit more. Otherwise, this video is going to go on for far too long today. And again, let's just start on a monthly time frame. I just rather see this on a monthly, then go down to daily because it's easier for me to see. So we can identify here, and this is when we start seeing price moving like this. We're in a sideways range. So what does that tell me right now? It tells me that the market's not in the best suitable time to be looking to trade this. And based on that information, I would just walk away from this pair. I really would not be interested in looking to trade this. But if we go in closer, let's have a look at what's previous sweep of this high. So we can see we had a sweep of this high. Let's mark that out as a sweep area. Then price has broken internally down. Okay, so we broke down, then swept up. Then we create this low in the market. Okay, we've only swept through twice. So you can start to see where we're just sweeping through those areas. So the market's not really going anywhere. So what do we want to see? Well, let's look at where price is pushed up from. We pushed down and broke structure here, which is fair to say. We had a break to downside there. Then we reversed structure to the upside here. On the way up, we left this area of potential demand, where we could see price dropping down into at some point. So it's a good area of demand to watch price to drop into. If we look at this, okay, we had a major swing break here to the upside as well. And you've got, there's nothing really great there. It's more of a range area I'd mark out here. Price hasn't quite come back into that area. And then we had an area of demand I could draw out here. Okay, on a monthly, we bounced off, then broke through. That created my flip zone with an area of supply here. I could mark out, then we've broken straight through, leaving this area of demand. Okay, so we can start to see the mapping of price here. We have another zone we can mark out here of demand as well, below this demand. Okay, so it's starting to map everything up for ourselves. So understanding that on a larger move, we've got this breakout. We then had this break to the upside. Okay, let's remove this for a moment. That created this area of demand. We're going to mark that one out. Let's get that marked out. But then we got pushed through with the wicks here, removing it. So that then means we've got this space below where we have this area of imbalance we're pushing into. So I'd like to see from this area, really, we did have, and we can mark that out, where we had a push to downside there, major swing, push out. We did have a higher low formed and a breakout. And then we did hold at this low, pushed higher, swept the high, and then we've broken lower. So you can see how we're starting to move sideways. So we just mark out this low. Okay, so we swept that low. We did sweep that low, pushed higher, swept the high. So we are very much sideways. So what I want to see really is price to continue down to an area of demand to give me a reason to look for a buy there. If I now go to a weekly time frame, and again on a weekly time frame, we can see where we had that sort of move out. If we go to this internal price action instead, so what I'm talking about is looking at this move in the market, just so we can fine tune what's going on closer in. We can start to say, okay, we had a break of structure internally there to the upside. Then we had another push up, break of structure. Then we've got this as a potential weak high. This is a strong low. That got reversed. Okay, so now we've broken out to the downside. That means we've got a bearish bias looking at that internal structure. What broke that to the downside is this area here where we can see price right now. But we also have an internal of this internal move. I'd like to see there's an area here of potential supply on the way down. That's an internal supply. And we even have a smaller zone right there that you can mark out where price eventually went down to push through that area where we did hold. Okay, so it's marked that as internal supply, and this one as well as internal supply. So we can identify where price is holding those areas as we push lower. So going down to that daily time frame. Okay, so a large area above this area where prices come down, we've held within it, and we have larger zones below. So from this moment, I'd be looking for a continuation lower. So we can now start to look at these levels here. It's going to be a inside area. We can see price pushing lower. So we've eventually bounced off this area, pushed through, pulled back, looking for a continuation, ready for price to continue to push lower. So we even have an internal area here we can mark out. So we can mark this out as an area of supply. There's going to be more than 4-hour zone. And if we go down to 4-hour time frame, we've got that break of structure that we can mark out here to downside. Okay, and then we've got this week low. So we're just really looking for price to either okay, push back up into this area of internal supply here after we come out of this area to then push for this week low. So if we just look at what we've got at the moment, prices come up. We have made that sweep there of that high. So we could see a continuation, but we have failed. Okay, this big push down, this wick is filling this area of imbalance. We failed to run this low. We could see a final push higher to run this high, which is now going to be an area of liquidity. So let's find that level. So we could see a run higher to run this high before we see a run for this low. So that is the Euro British pound. There's not much on there. We are looking bearish still at that area. If I just look at the current movement in the market, okay, so we've had this swing move. We then had this break here to downside. Let's mark this off as a break on the lower time frame. Okay, and then we had another break just about there. It's more of a sweep, to be honest, but we'll see that probably is a break on a lower time frame. So we do have an area of supply we can mark out here. This one has got swept through, so we go to a lower time frame of 30-minute. You're going to see this is a breakout, okay, to downside. We lift this area of supply. Price hasn't yet come back into that zone. We've then pushed deeper here. So we ran up. We had some areas of equal highs here of liquidity. I'm not going into this too much depth because this is more just about understanding that supply and demand and market structure. But there's an area of liquidity here got run. We run that liquidity and we broke to downside. We then left this area of supply here in the market where price is now sitting within. Now, if we're to see a continuation out of this area, we look for price to want to run to this low here. But we still want to see price running into this area of supply at some point. So that is the pound US dollar. Where is this bouncing off? Well, quite simply, we have an area down here of demand. Okay, so mark that off. It's your area of demand where prices bounced off. Price is always going to bounce off an area in the market. You're always going to find there's a zone where prices got to bounce off. So that's the Euro Great British Pound. Let's now go over to the next pair and look at the Euro Swiss franc. Now, these two pairs are not the best pairs to look to trade, really, the Euro Swiss franc and the Euro Great British Pound, but let's look at what we've got. So if we look at the last move closer in, we can see we had this break of structure to downside, that daily, and we'll probably just run that low again. We sweep it on the monthly, we're going to see a break of structure there, okay, on the, let's mark this off as area of supply. So there's our test of supply of that break of structure. Quite simple, okay, that's how I quickly look at those charts. Go down to a weekly time frame. Now on a weekly, okay, understanding that we've now made that swing move here to break out, leaving area of supply, come back in, then we create this level, which we haven't yet actually broken through. We've come off this area. Let's look at the internal structure, what's happened. Okay, so we broke down, broke back up here. So break up. Let's find that boss area. We've made a higher low, higher high, break a structure again. Then we reverse structure here and broke bearish. Okay, continuation bearish. And now we're looking for this low. It's just been swept. So it has been swept. We could see a bullish move out of that area. So if we start looking at areas of supply from this area, this is a area of pivot supplies. There's an internal supply. We didn't actually come back to test it. We've held at an area of imbalance. Then we create this area of supply. And again, we haven't yet come back to the area of supply. So just mark this out as internal supply. Let me show you what actually happened. We've reacted here off this area of bearish imbalance. Okay, let's put this on this time frame. Let's put this to the back. So you can see that we've broken down, come back in, held at that area of imbalance, and then we've broken structure again, pulled back again, okay? And then we haven't really closed through this low yet, so we could see a pullback higher, okay, into this area of supply even. That's not a valid break yet through this low. Now, if we go to the daily time frame, let's have a look on the daily. You can see we even wicked through on the daily. So I'd like to see potentially a pullback coming into this area of supply yet. We also have above there, we have all this trend line we can mark out of liquidity to be run. Now you can learn more on liquidity inside the channel. There's a playlist that goes through liquidity all about how we look at liquidity, so make sure you check it out at some point. So we're looking for this to be run up into this area of supply. That would be an awesome way to look for price to run up into this supply, then for a run lower. Now, if we look at the 4-hour time frame here, okay, so I can identify a break here to downside, mark that off. Okay, and then we have an area of supply on the 4-hour where we had a reaction out of. Now, I haven't got any other, this is all internal structure off that, so I drop down to a 4-hour. You'll be able to see where we've had that reaction, and then this becomes my current low where we just run through. So you can see we've come off this area, we've gone through to that target, that week low, and it was a good trade. Now we've got all this price action within, okay, which is all internal. So it's internal price action within this internal move we've got marked. So if we went closer in here, now on a 4-hour time frame, we can start looking at the structures, okay, on a lower time frame. So let's mark this out on a 15-minute. Okay, so we had a break to downside there, another break to downside here. We did have a small quick pullback, you could say there, but mainly I'd be looking at this as a potential wick area of supply, or even you can use that full candle where we now come back into, and that would be my current supply. So we go down to a 30-minute, and this is where we see that major swing break to downside. We've got some internal structure there, but we're pushing in. So we're either looking for a reversal out of this zone to look for a run to this low to continue with that move, or you're looking for a shift of structure, removing that area of supply. And if we go back to the higher time frames here, okay, we could still see a pullback at some point to this area of supply. But right now we go with the smaller time frame. We look to see if it's going to hold at this area of supply. We can then look for a run for this week low. And so we need to see if we have any reversals out, okay, of that area of supply. So that is the Euro Swiss franc. Let's have a look at the Euro AUD. Now, after we've gone through the Euro pairs, we will have a small break. Let's have a look at the monthly time frame quickly first. So on a monthly time frame, on a larger view, we had this break of structure. Let's go this area. We had a break here to the upside. We could mark off. Okay. This becomes kind of a strong low. And let me just go closer into price as well. If we look at the smaller swings, we can identify we've got a break here to downside. We've shifted back bullish there. We've pulled back higher low. That's only a sweep through. So right now, you could look at this as your current area of demand. And it's a very good zone of demand. And I'll show you why. Because we had a nice looking sweep right there in the market before price pushed higher. So it's a good looking zone. Then we have this rally area of demand there as well. Okay, there's a couple of zones below price. If we go down to weekly, we can then look at this weekly structure within. So let's mark this out. So it's a break of structure to the upside. This one, we've only swept, wrong level. Okay, so we only swept through that high. So it's a run of liquidity as such there. And then we have this is our strong low, which we haven't yet been removed through. We have a small area of demand where price is held at. So we have this is our internal demand. So until price is going to push through this area of demand, we're not going to go deeper to any of these areas of demand below. So it's a very good chance after seeing this sweep of this high, big sweep rejection, we've pushed all through these imbalances. Now we could see a continuation down to demand here, or even this demand here, continuation lower. But until you see that break and close through this low, there is nothing you can really do at the moment on this pair, but look for continuations to the upside. So if we look at this current move in the market, okay, so we can mark off this low. We just swept that low. So there's a push through of liquidity there. Where are we? Liquidity area. We pushed through, equal lows ready here to here, and push through. We could see a push higher. So that's what we're looking at for potential bounce now out of demand. If we look at structure on the way down, okay, so we look at this. We have a break heads downside, break to the upside. This is going to be my 4 hour where I'm seeing a shift in structure. Mark it out. Then, okay, so we shifted bearish, shifted bullish. This created an area of, okay, it's also going to be a 4 hour sweep area. And if we just go back now to, let's go to a 4 hour time frame, you can see where we had this structure, went bullish, bearish. So now we've actually got a potential weak high up here where we could look for a run towards. So understanding this, if this sweep holds, of course, we're looking for this to hold at this area. Now, what we can look for is we have a drop down pullback continuation. So you want to see the market running through this high. So on a lower time frame, we can see this potential reversal. And if we just go down to a 30-minute, this is the area we're going to be watching to see if this is going to hold. Let's mark that off. And that's going to be an area of supply sitting there right now. This area of supply from that break to downside. So we've got to see this area of supply getting pushed through. This level closed through. There's the shift to downside we just saw. We then currently have this weak low down here. So we could still see the market showing as a reversal out to push for this weak low. That's absolutely possible still. But understanding that on a higher time frame, we're sitting inside areas of demand. If we look back even here in time, if we right the way back, we'll be able to find in here where we see price pushing away. We can mark out a small area here potentially of demand. Now, whether we got to that demand on the 4 hour, let's have a look. Let's mark it out. Okay, we even have the big imbalance above where price is pulling into. Let's shrink this out. Don't think we've quite made it. Didn't quite make it that demand, but we did go inside the area of bullish imbalance. Reverse. We're just looking to see if we can reverse through this high, okay, on a 4 hour time frame as well. So if we can push through now, that's going to leave a new area of demand we can mark off once we push through. Now that's going to give you an indication that we may well now run for this high up here. And in fact, this is going to be, yeah, high up there. It's quite a move if we're going to get that reversal. So look for your reversal out first. This is the EURAUD. Okay, look for the reversal out first, pushing through, leaving a new area of demand. And if we get the reversal through, we're going to have an area of demand probably left over here. And look that out. So what we'll be looking for is something like them push through, close through, pull back, look for your reversal out of this area here to run this high. Continuation. Then you're looking for a continuation to hold bullish until you run up for this high here. So that is the 4 hour time frame. And remember, dropping down to a 30 minutes here, there's an area of supply in the way first. So we need to see that supply broken through and closed through this area of structure before you can look for that pullback. Now, this is all understanding your different types of structure and your supply and demand in combination. Now, there is the playlist within this channel goes through both of those, goes through the market structure and understanding of the supply and demand. But again, like I said, if you want to take this further, then do absolutely fine. Join the waitlist for the 90-day profit trading system. Okay, we aren't going to be opening again until January next year, but if you want to be part of that, I do suggest getting on the wait list now while you can, because end of January is going to be coming around probably pretty soon once we get through Christmas. So that is EURAUD. Let's have a look at the Euro New Zealand. And let's go to the monthly again. It's quick on a monthly. So again, look, we can identify where we broke up here. And then since then, we haven't really broken this high. We've only swept through. So instead of going through, looking at this larger price action here, I'm looking at this major move up, looking for potential pullback continuation. Let's look at the smaller move up here instead. So let's zoom into that. And we just look and focus on this move. So we can identify a break to downside. Then we shifted structure here to the upside. Let's just use this for now. And then we had another break to the upside here. Now there's a higher low, so it's a higher high, higher low. Once we had this candle closed, that's another break of structure to the upside. And then this is then the current high, but we've made this low and we've only swept through. So what we could see is the market may want to push through this low here, as we never closed through yet. So if we're looking at an area of potential demand, we're sitting inside demand based on this move here. So we are holding at the area of demand. If we look at a weekly time frame, okay, we'll be able to see this structure better. So within, okay, you've got this internal mode where you had the breakout, okay, push up, did push through, push bearish, didn't go bearish, went back bullish, and then that gives you an area here of potential probably demand there. I'd have marked out as an internal potential area of demand, and that's where you're looking now for the market to continue bullish, okay, to run this high here, but also to run this high up here. So let's mark that out as an IBOS area. So looking to see if we can stay bullish to run up, okay, higher from this area. Until we really push down and push through this area of demand, then we start seeing a bearish price action. We continue to go with that bullish flow. So let's go down to the daily. You'll be able to see this better on a daily time frame. We've got those swings to the upside, okay, swinging pattern to the upside, internal move here we can identify. Now when we do come into this area, we're going to see a shift out on a lower time frame. So we have a shift to downside, we have a move here to downside. I can mark this out just to show you. Let's have that as a IBOS area. We'll shift it back out bullish, and this does leave this area of potential demand that we haven't yet come into. That's going to be a 4-hour demand zone. But then as we shift up, we create this breaker structure here, and let's mark that off. And then this became a low. We've only just swept through that low, which is potentially going to give us that liquidity sweep area. And you're looking then for continuation still for this week high in the market. So for now, just quickly go down to a 4-hour time frame. Let's have a look at what we're looking at. Right, so we're looking for continuation to run towards this high. What's going to help me with that is looking for a shift in structure. We haven't actually come to this area of demand here. Okay, but we have a smaller zone we can mark out right here on a lower time frame, but that actually got wicked through as well. So we had an area of liquidity at this low. I can mark that out. You can see that actually got run. That was the last area of liquidity that got run. Okay, so we don't really need this one. And now we're just looking for price to confirm that bullish movement by again that we have a break of structure there to downside, a lower time frame. Then we're just looking for a break of structure back to the upside. That's all you're looking for to confirm a reversal out. But currently we're sitting at an area of supply, and we could still see a run lower from here. Let's go into the supply to run for this low once again. But look at the big wick we've got on that candle. I do not see price wanting to run lower here. And we just drop down to a 30-minute, you'll get a bigger picture. So we have this break to downside. Just looking really for price to remove this area of supply, okay, and push through this level to give us a new demand to start looking to buy back to the upside. But we could still see a reversal out and then run for this week low, because we still push down towards this demand here below we haven't yet got to. So keep that in mind, that we can see a push yet for this area of demand on this Euro-New Zealand pair. Now, EURAUD is bullish, so we expect to see this go in the same direction. So if you do see a break to the upside, that's going to start moving out of this area of demand we've seen to continue to the upside. So that is EURNZD. Let's have a look at the EURCAD, a couple more pairs, and then we'll take a break. So on the monthly time frame, zoom in. And again, let's look at this movement. We could look at this as a break of structure. Just mark that off. A major swing move, leaving here an area of supply. Just tag that supply by the looks of it. And just make sure I've got this marked off correctly. Swing supply. Here we go. So we just tagged that. We could then see a continuation to run for this low down here. So this is our week low in the market. We see a bounce. Did we bounce off an area of demand? Well, we didn't bounce off here. We have an area of demand here. Market did bounce from. So we could see this as a area of swing demand. It's the major full zone. You could mark off the full area. Okay, this is a full zone where we see that bounce from. So now we could see a run towards this low. If we go down to a weekly, you can have a look quickly at how structures are moving. So this is the last high. We did break out. And that means for this though, I'm going to need to see this low getting run for a shift. So we do create an area of demand here. It's going to have to be removed first. So mark that off as internal demand. So we could still see a push down, then a bounce back high yet, because we've still got a bullish bias with structure. So this becomes my weak potential high. So it all depends if we continue to push down through this demand, then we can start looking to run for this low. So if we start to see price want to break this demand, then we could potentially start to see that run lower. So if we now go closer into a daily time frame, and let's look at the daily movement. So since this high, okay, you can see we created this break of structure here. Then we create a break of structure now to the downside here. So this is going to be a 4-hour, okay, break of structure. Have that there. And then we've broken once again right there. And the break of structure. I know this video might be taking some time. You have an area of potential supply you can mark out here on a 4-hour, and obviously we have this area of supply which became a supply after we see that breakout. That done its job, it's held price. Now if we go down to 4-hour, you'll start to see the development here. So we have this larger move in the market. We had a break of structure to the upside, broken back down. Now you can either look at this full swing as well. We had a nice big swing move up as well here. So you have a swing area of demand down here. Looks like that's been broken as well. Now the area we want to pay attention to is closest the area to price. So we've had a break of structure. We've got a swing area of supply above. And internally, we've also got that last break of structure to the downside. So we can mark this out on the lower time frames. This is then going to be my week low on a 30-minute. And we have an area of supply at that wick that we can mark out still. So this is how we quickly look at this. Then we go down to a 30. We can identify that break of structure, our current week low. We're holding at this area of supply. So until we see this supply removed, a new break of structure, we're not going to head towards the areas above. So we could still see this holding, continue lower, and you look to continue with that trend. But if we do see a push through, then we come back into new areas like these gaps, demand area, to then start to run up to the next supply. So that is EURCAD, very straightforward, simple to look at. Let's now go over to the next pair, which is the Euro-Japanese yen, and then we'll take a break. Okay, we've been doing this for a little time. I could do with resting my voice for a few minutes and having a nice drink. Hopefully you want to take a break too. And again, let's just look at, okay, on a monthly time frame. We don't need to look at all these larger swings here. Let's look at current price. We can identify the last break of structure to the upside. Okay, we've dropped back into this area of demand, and that's where we've been holding since. So let's mark that out. And then if we go down to a weekly time frame, okay, it's probably more of a weekly swing structure here, but if we look at the weekly movements, do have this break of structure to the upside. Then we get a break and shift to the downside. That then gives me a new area of internal supply above where we could see price holding, as we've created this low in the market where we could hold these imbalances or come into supply to continue to run this week low and remove this area of demand. So we really have to watch the direction here at the moment, because we have a potential bearish bias of that internal structure, but still bullish with that swing structure. Now, swing is normally going to be king when we're looking at structures, and we're more likely to see price want to continue to run the swing week high up here. I'm going to mark that off. So more likely to want to see price push up from here to run that high, but we have to also consider we have this supply sitting above. So we look at current price, let's look at the 4-hour time frame now, and we're going to identify we have a 4-hour area of demand where price is just bounced from. Okay, so we can mark that out as a 4-hour demand zone. But the last area we really broke out on a 4-hour is going to be this level right here. And this left an area of supply. So we have an area of supply where prices bounce from. And quickly go down to 4-hour, you'll see exactly how this is mapped out. So this break to downside, swing pull back into supply, and then we start to run lower. There's an area of internal demand there, but it's not a demand zone I'd be looking to buy from. It's an internal zone of the internal move. So this is the major swing move on the way back up, and we're now bouncing off this previous demand. Now we look at the 30-minute structure, we can identify, let's mark this off, this was a break to the downside, and you have a current area of supply then from this high that we can mark out, and we also have an area of supply even here as we make that breakout where price now sits. So just like we've seen those other pairs, we can still see a run yet deeper to the week low here. Okay, let's mark that out again. So if we look at, we're sitting inside swing demand, okay, anyway, on the higher time frame and bouncing out this demand. So what we're looking for now is the lower time frames to start aligning, and that's going to mean looking for the removal of this 15-minute area we got marked, or this 30-minute. Okay, once we start seeing price breaking through here, starts to hold, continue higher, we've got that bullish bias once again. We do have an area of supply above, okay, this swing move that we can still come into, so we can still see price want to run through up into this area of supply, and then you can still see a run. And that's going to be a much better area to take a trade from than this zone. There's no room, okay, to downside here for me with this area of demand on the 4-hour and that higher time frame demand. But a sell from up here, you've got much more room to do this sell too. So that is the Euro Japanese yen. That is all those euro pairs. We're going to take a break now. I'm going to have a 5 or 10 minute break for myself just to have a nice drink and get ready for the next lot. We'll go through the pound pairs next, and we'll speed up a little bit, but you have the general idea of quickly marking out those structures, the areas of supply and demand, to get a quick idea of your direction in the market. Hey traders, we'll get back to the video in just a second, but listen up. Right now you can join my profit per trade workshop for just £49, normally £199. This workshop is packed with practical strategies on market structure and supply and demand, all designed to help you trade profitably, but hurry, only 30 spots are available each month. If you're serious about taking your trading to the next level, click the link in the description of this video or above now and secure your spot today. Let's get you onto the path to financial freedom. All right, let's get back to the video. So I hope you had a quick drink for yourself, beverage. Okay, let's get into the next bit of this analysis. We go through 28 pairs, marking up those areas of supply and demand and market structure to help make your life more simple. Now remember, like I said, make sure we're on the pound US dollar. Remember I said make sure you do your own analysis. This is just to help you to see how I do my analysis, give you that idea of how I'm marking up my structures quickly and my supply and demand zones, what I'm looking for in those pairs. But always make sure you do your own analysis where you teach yourself to trade. So let's look at, again, start from the monthly quickly. I got a nice break to downside here on a monthly. We then are looking for continuation to run to this low. And finally, we've got this area of supply, it's drop base drop area of supply, where prices bounce from. Okay, very simple, done, dusted. Let's go to the next time frame, the weekly. I like to look at the weekly next. I got this previous high was pushed through. Okay, so I'm going to mark this off. We then had a continuation higher, a reversal right there of structure. Let's go in closer. And then we left this area of supply. So we've got a new supply created as we come out of that area of supply. Now on the way up, I can also mark out this area of demand where we've just tagged into. And we could look for potential bounce from to run back up before the next move down. That's the way we look at this. So that is the daily time frame all sorted. We go down to that dailies, have a look at this. All looks about right. Now we can look at the 4-hour moves. Where do we currently sit? Well, we just had a nice break here to downside. So for me, there's going to be a break area here, and I can mark out this is an area of supply. Nice and quick and simple. Looking for continuation to run the week low here once again. That's perfectly acceptable. We can see that happening. We go down now to a 4-hour time frame. There's my 4-hour structures with 4-hour area of supply. So we're looking for really a continuation with the bearish move. We're looking for a push up to run these highs created into this imbalance to run the week low. That's all I'm looking for here. If I look at the lower time frame quickly, okay, so we've got a break of structure I can mark just there. That's one I'd mark out. And I'd mark out this is a area of drop, base drop area of supply, which is the closest supply zone ready to look at, especially coming into this 4-hour zone. Then we have the origin zone up here as well. And I'd mark this off as an area of potential liquidity on a lower time frame, as well as this time frame that we could see price running. Go to that 30-minute, and there we go. Okay, so we're looking for a potential move to run up this high. Okay, run this area of potential liquidity into the area of supplies above, then look for a stronger push back to downside. So that's the pound US dollar. Very quick, very simple. We have our supply and demand zones. We have our direction. We're looking for trades. We're not looking for a trade unless price comes up into that zone you're looking to take a trade from for continuation. That's why it's so important you get this right when you're marking your zones out. So next pair is the pound Japanese yen this time. We did that last previous one out. Let's now look at the pound Japanese. And quickly, larger swing. Okay, let's look at this as a larger swing because there's such a strong up move there in the market. Now you break a structure, leaving this area of potential demand. Okay, and we're looking for continuation up to run this high here in the market. Very quick, very simple. Let's go to a weekly. So to be honest, it's mostly part of the weekly. It's all the same here, but we do have some internal structures I can see. Break a structure, break a structure. Okay, so we can mark this out as a potential break there to the upside. Another small break there. A shift bearish right there. Okay, you can see this is internal structure to the downside. What does that mean? That means, again, it's going to leave an area of potential supply like we saw in the Euro Japanese yen. So we can now mark this off as an internal supply zone where we could see a reaction of, okay, or we could see price run straight through it as we run through with that swing. Remember, swing structure is always going to be more powerful, but internal structure is still bearish. Back on the daily, you'll see this better. So there's our swing move. There's our internal structure. Now we are making that small move to the upside. So it does look like we're heading back towards this area of supply. We do even have this area here of supply on a 4-hour, and that's just been run through there. So that's been removed out of that move. So if we look at the 4-hour, that was your previous high, and we've actually closed through. So a 4-hour has actually closed through to the upside. That's coming from this swing low down here, understanding that this was the move down. If you look at this as structure, that's a full swing move breaking through that high. And you could see a pullback before a run higher. But because it's such, okay, so we're going to have demand here that you could look at. Let's mark it out for you so you've got it. And then we've got another break of internal structure you can mark out here as demand as well, where price is now potentially bouncing from. And if you look at the way the market is moving, okay, so you can see you got a break to the upside there, break there, internal shift there, shift there. So a lower time frame is actually bearish. And let's take that away. So if we was to use this as the internal structure, so broke up, broke down. So we mark this off as the last breakout. So we have like internal, so it's like an II boss, not just the I boss. This is a low, but if we make a pullback, this is the current low, but if we make a pullback, we could see this becoming the new low first. It makes sense when we go down to time frames. Mark that off. So with this breakdown, this created an area of potential supply. You can see we had a reaction from it. If this breaks structure here, then yes, this would create, this is the supply that broke this low, and then this does break out. This will be a new supply as well. Down to the 4 hour, this will be much easier to see. So this is the supply we've got broke to downside. And then we have this next break of a potential break to downside. We can see it's broken on the 4 hour, and potentially we could see a pullback to hold to continue lower. We're bouncing out this area of current demand that we marked out. We have another demand zone further down inside this higher time frame. So what we're looking for really is a potential pullback for continuation. It's only a sweep here on the higher time frame, but we see the break of structure there on this time frame. So again, we can now look at our last break of structure on a lower time frame. It's going to be right there. That leaves an area of supply that we currently see in. Now, if we're true to nature, we would say this was the last breakout of the smaller time frames, and this is a breakout. So this is more of an internal reversal again. So go to a 30-minute. So there's that valid breakout, and then this would have been the next break of structure there, more so than this one. So this is more of a internal structure, but as you can see, prices pull back in. We're at the area of supply, and we could see a run from this area to run that week low once again. It's all about understanding, okay, reading the market out of these zones. And that's what this video is about. This video is just about marking up those zones, the structures, to give you a simple way to look at how to quickly mark your charts and to give you an idea of potential best trades we can look at for the week. So currently on the pound, Japanese yen, we're at areas of demand, but on the lower time frame, we're coming out of an area of supply. We could see a run lower. Next pair on the pound is the pound AUD. So again, let's go to a monthly. Let's just see what this looks like. Expecting to be quite choppy. We are sideways roughly there at the moment. Let's look at the current break. We have a break of structure we can mark out right here. And let's mark that off. That created an area of demand that we haven't actually come into. Okay, so you can see that across there. We haven't come back into that. We push up. There's no high until this high where we just swept through. So if we was to see it close through, we're going to have a new strong low down here. Now on a weekly, we're going to see which is probably the same thing, just that sweep. But if we look on this break of structure, so on a true break to the upside is here. Very different when you start looking at your structures. And then we had this break to downside right there. That leaves, this is an area of supply, which gets swept through. Now, internally, from this point, we can also look at the fact that we had this internal shift bullish. And again, shift bullish. And you can look at this as a potential area of demand that price could come back into. And then we'd have a weak high up here. So we drop down to daily. You can see that we're bouncing to the upside. We've come back in here. This looks like shifted bullish again. So we've got, zoom in here, we've got a potential for the market to hold, okay, at this area of demand. And we could see a run up for the highs up here. Then eventually to this high here. Now, the way we can look at this is we can look at the lower time frame. So we had a break Okay, so look, we had a break of structure to downside here on the lower time frames. And then we shifted back bullish there, we could say. Which leaves this area of demand. Now, since then, we made this high. So what I look at, I'd mark this off now on the lower time frame for me. And what we're on that 4 hour. Go down to the 4 hour time frame. Okay. And this would be, let's double check that. Okay, so this would be my 4 hour, area of demand. And we can see prices come up, okay, into this area of demand as well. And we're just looking for the shift out. So there's a potential area we can look to run this high. Okay, so if we run that high, then let's double check we're on that 4 hour. Yes, let's just make that a 4 hour level. Okay, so if we see price from here running through this high, that's a shift in structure, leaving new demand on the lower time frames. We can start to look to get bullish to the upside. And we're going to look to hold bullish until we run this week high up here. But on the lower time frames, we're still bearish. This is a current area of supply. I want to see removed, okay, on this time frame, the lower time frames, but we'll mark it on the lower time frame. It's a potential area. Okay, let's go down. It's an area of supply. Price is currently holding at, and you can see where we shifted. Okay, so we've had this drop to downside there. You've got a weak low down here, which actually created a sweep first. So you can identify with that sweep and then that push higher. And so we're either looking for price to hold at this supply to run this week low, but now we're inside demand, don't forget, on the higher time frame. So we'd be better to see a shift out bullish, creating new areas of demand to come back into to continue bullish. And that's what we're looking for now on the pound AUD. Next pair is the pound New Zealand. Again, let's go through this a bit quicker. You can see how quickly we can actually do this then. So last break of structure is right here for me. So let's mark that out. The area of demand is really here. Now you can see that we actually created a push away, bounced off that demand and pushed up. So we then have another demand we can mark right there where prices bounced from. Now we also have an area of leftover imbalance there as well. But let's mark off the current week high as well there. Now we go down to a weekly time frame. There's our main break of structure. Okay, current week high. And if we look at the internal move, so we had this break to downside here. And then we've broken back up. Okay, so we've broken structure there to the upside. And then we've made this swing high, broken out again, and then we have the current high. So we've got the week high of the swing and the internal at the same place. And we could also look at this, okay, where we're seeing this movement here in the market. I can mark it up to there. It's going to be that internal area of demand as well. So we have an internal demand, swing demand. I would be looking for price yet to pull back into here to run higher, either to sweep this area of demand into this demand or just to hold at that area to sweep these lows here in the market of liquidity. Some equal lows that we can see run through those lows into this demand, filling this last area of imbalance for a run higher. So that would be my ideal looking for that trade. So on the daily, you'll be able to see this, okay, where we have the same thing. We have that area of the equal lows. Okay, we want to see run of liquidity there and into this area of demand. So if we go closer in, our last break to the upside, we see this movement, we broke up, we can mark off this major breakout here. Okay, let's mark that off. That does give me this move up, pull back. This is an area of demand that we could look at where price is slowly pushing down through, and I'd expect to see that potentially fail and run through. So if we now go to a 4 hour time frame, you can see where we're holding at that demand, but we continue to push lower. So that becomes your current high in the market. You're looking for price to run back to. But first, you'd have to see a shift of structure back bullish. Now, we can identify where we were bearish, pushing down. So push down bearish there. Push down again. Now we can mark this out. Let's mark this out as a different structure so you can see. So bearish, bearish. And we've just now swept that low. But we can see, well, we could see a continuation down from here. And currently we're bouncing from this area of supply. So we can mark this off on the lower time frame. And we'll also mark this off on the lower time frame as well. So we can see where that potentially the market's going to go to. So now we drop down to that 30. And that's where we can start to see where price has come into this area of supply. We come into this area of supply there. Don't need that. Let's get rid of that. All right. Into that supply where we actually create, okay, some equal highs, a nice looking sweep. So we sweep the highs and we run for the low. Trade done. That's how we look at taking a trade like this. So we've got this currently off this area of supply. We've run through the low. We do have a bearish bias. We're broke structure. We're making a pullback. And right now we're inside that demand. So until we really see this demand removed, this is not a good time to be looking to trade any sells. We should be looking to buy. But look at the way the market keeps going deeper and deeper into this demand. Potentially, we're more likely to see price want to push through that demand to continue lower. So that is which is in pound New Zealand. And let's go to the next one, the pound Swiss franc. Again, let's quickly go through the charts, the time frame, sorry. So if I look at this, really the last major break we had was right here. So that's the last major break. We then have this as a current week low. And we have really this small candlestick within. That's going to be an area of potential supply. So we mark it off like this, where price is holding. We've swept some highs here. So it is a sweep of this high. We'll see that as some liquidity taken. If we go down to a weekly time frame and see where we created that sweep above those highs. And we're going closer. Let's just look at the last price action here, where we had a break to the upside. Okay, on that internal move, we had a break to the upside there. Shift back bearish. I mean, in theory, it'd be this high. Okay, so you could say is that one, but we'll see that as the closest shift in structure. Leaving this area of supply, where we had a reaction. Okay, so we had that out that higher time frame area, or larger supply, shift out, back in, continuation lower, okay, leaving new supply. So we can mark out a new supply where price could yet come back into. Now, since price has moved very sideways, hasn't really gone anywhere, and you could look for price to want to run this low. So it's in the same direction as that swing move, and we're potentially looking bearish. So we drop down to the daily to be easier to see. This is where we see that break to downside, break to downside. Okay, since then we haven't come back to this area of supply. We do have the smaller zone we can mark out here, where price is held at. Now that's going to be my 4 hour, as we see that break of structure there on a 4 hour time frame. So on a 4 hour, this is really that week low. That's the last area of main supply I could really mark out. That's where you're looking for price to continue to run towards this week low here after coming into this area of supply. Now, obviously, we have all this price action within. And if we go to current price here instead, let's look at what's happening as we come out. So we pushed up, broke structure. There's nothing really within there. So this is going to be a major break. So it broke down, did break there, then broke out there. So I'd see this more of a break to downside. Continuation to the downside. That's going to leave an area of supply here. That's all we're looking for. Where is price bouncing out of? And this is going to be that 30-minute area of supply. That's my last break of structure. I'm going to mark out. That's going to be my weak potential low. So we're looking for price to continue down with that structure. So we've come out of this area of 4 hour, dropping down now to 30-minute. We're inside supply and we're currently holding. We have shifted to downside. We've gone up. We've shifted a bearish drop to downside, and we could see continuation now to run this week low. Okay, so we're going with that overall direction. Everything is bearish coming out of these zones. We're still bearish. Swing mode here is bearish, looking for it to continue to run lower. So that is the pound Swiss franc. The final one is the pound CAD. Then we'll take another quick break. So let's have a look. So the pound CAD, what I'm going to do with this one is we're going to look at the closer swings. It's the last break to the upsides. We did have a break, in fact, here to downside. Come around the same area. Just take a look back. So larger break, break up, break down, small break. We did break there as well. So on a larger swing, this is an area of supply where price is holding at. So it's important to check, okay, the larger movements in the market. So we could say that's where price is now pushed into. And if it does hold from this area, we have run above this high as well. Wrong thing. Let's grab that again. We have run above that high. So as an area of liquidity has been run into that higher time frame. If we now drop into, okay, let me just mark off this as a potential weak low in the market. And as we've pushed up, let's look at that structure. So we could see this break to the upside. Okay, failed to break higher. Now we're looking to see if it's going to hold. Okay, so this is a break. Let's actually just go in closer, double check. So this one's got a high, okay, what's that? 78526, a close price of 78554. So 526 and 554. So that did actually close. So we could see that as a close of structure. And then we have another break here to the upside. And that means that this area, we can use this candlestick was a previous area of demand. So we can mark it as internal demand. We bounced off, we ran for the high, and we create a valid sweep. Okay, so this demand held, we ran that high, and then we've dropped down, breaking that demand, leaving this as an area of potential supply. It became a flip zone in the market. So that's what we're looking at right now. I'm going to look at this as the breakout point, okay, on that shift. And we're looking for price to pull back into the areas of supply. So that's what we'll see on a daily. I have a very unique way I like to look at my charts and marking up my structures and my supply and demand zones. You're not going to find this done anywhere else really. It's the way I like to look at marking mine out. So I'm looking now for price to make that pull back into supply the next run lower. We're looking eventually for price to run down there on that larger swing. So if we start seeing a pullback from here, this is going to create our new week low. Why are we going to see a pullback from here? Well, we've seen a break of structure into a previous area of demand. Okay, so previous area of demand. Now this is actually going to be a 4-hour demand there. We'll go up to a weekly. Yeah, it's a large area of demand we're seeing inside on a weekly. So let's go back on to a current 4-hour. We do have this internal break here to the downside. So this is going to give me an area of supply. Right there is my area of supply. So if we're to see price pulling back into this supply, we've got to shift that structure. So I much prefer to see some kind of a pullback, react of this area of imbalance, drop lower, then shifts out and removes that to pull back into demand. So we can start to see that pullback into this supply, and we can start to see the shift out back lower once again. So I go to a 4-hour time frame, you'll see where we're bouncing off this area of demand, and we're looking for price to make that pullback into the area of supply above. Now, we do have a nice looking area we could sweep above that high. Let's mark that off as an area of liquidity to the imbalance above. And then we could see a run lower once again to run this week low. So we could easily see price want to do that, continue lower. So you have to keep an eye out on this. First, we're going to have to see that pullback first to happen. For this to happen, we've got to see price shifting through this area of supply. So we can mark that off as the lower time frame to make it easier to see. And let's drop back to 30. So you can see that we're going to have to shift through, okay, breaking this area of supply first before we see a pullback to higher time frame. Now we could just as well, okay, run up, run all these highs into the supply and run for this week low once again. That can still happen, and you can still look for this to happen. We can mark this out as an area of liquidity that can be run. Okay, so we could definitely watch for a push up and a continuation lower. But I would much prefer to see a shift in structure. Okay, well, actually, to see price pull up, run lower, then pull back and start to see that shift back up here would be better. We went through. But right now, see how we react to that area of the lower time frame of supply. So that is the pound CAD. That's all the pound pairs. Next, we'll go through the AUD and New Zealand. We'll do those as one. But I'm going to take another break now again, just to have another drink and to rest my voice. And I'll catch you back in a few seconds. So let's go on to the next lot of pairs, and that's going to be the AUD pairs, and then we'll do the New Zealand pairs. So let's start off quickly with that monthly chart. Let's look at the larger picture here. So larger picture, we had a break of structure to the downside. Let's mark that off. This becomes a potential weak low in the market. And we can identify that this area of supply where price bounced from. Quite simple, quick, easy to do. We can see some internal movement there as well. So we possibly could see some internal movement. We had a break of structure here to the upside, shifted bearish here, okay, and then continues for this low down here. So this will be potential weak low. Okay, I'll be looking at on the lower time frame there. And this one as well. So let's just mark this out as a potential shift. Let's go down to the weekly. And we do have on the weekly, okay, we break up, broke down, okay, broke down, we swept that high, broke down, we broke down. So this is my final break to downside. So we get rid of this one. And then we had a sweep leaving this area of supply. So let's mark that off as a internal supply. Now what I mean is we had this push up to this high and then we only swept it. It's a valid sweep there. Okay, so we broke down, pulled back up, took out this area of supply, swept this high, okay, into the supply to the left. So there's a smaller supply here, price just pushed into. And now we're looking for continuation to run to this low. It looks like what the market's done here is we've come into this, as we retested that bit, come into this candle here. Okay, so we've gone into this highs and we've swept through. So you can mark this off, some equal highs. We've swept it. Okay, area of liquidity has been run. And then internally, we can identify where we've broken to downside there. Okay, so let's go down to a daily time frame, easier to see this. So there's a larger swing move to downside there. And then we continue to push lower to downside. And we have this as a potential weak low we could run towards. So that I can mark these out much quicker. We'll mark this on a lower time frame. We don't really need this one. And we can identify this as a potential large zone of supply sitting above, where we could pull back into. And then Let's go down to a 4-hour. So we can identify breakdown side, looking for a pullback into that supply zone to run this low. Now it looks like we've just swept those highs. So we have some highs here, equal highs have been swept. So we run that area of liquidity, and we could run for this week low from here. We don't have to pull back into that supply. It's the area where I want to see price pull back into to look for a potential trade. So we have run this high and this high, roughly equal highs. We run it and it looks like we're going to start running for that week low. Let's mark that out. But above this, we do have some more areas of liquidity price may want to run into. Now, if we look at the lower time frame here, we can identify that we had a break of structure to downsides. We had a drop, pull back, we held at that supply, broke out that supply, and we left this area of demand. So we mark that out as an area of demand. We went higher, we broke out again. We then had this as an area of demand. Price was holding at, and then we wicked through it. Okay, so we swept the area, pushed up, swept the high, and now look like we're heading lower again. Now, if we had to close through this high internally, there may be another zone, but for me, there's this area of demand below, which we can mark this out on lower time frame to make it easier to see. Just do that again. We actually went down. Right, it's gone out the way. So I can see this as a potential area could drop towards. Now we're looking for this low to be broken to confirm a new supply. So let's drop down to a 30. So if we break through this area, then that potentially could drop into this demand. But then we're going to create a new supply above. We still haven't actually got into this higher time frame area of supply I want to see a push up into. So we do hold here somewhere, push through, we could see a push up back into that area before we push down. That all depends how price moves. There's a potential area of demand their price could bounce from. We haven't got into a sell area for me yet, so I'd like to see a further push higher. We may not get that. Let's see. So that's the AUDUSD. Let's look at the next pair on that list, which is the Japanese yen. Again, let's just go quickly to a monthly. I'm going to go through these a bit quicker again. Let's just mark these up and let's speed this up a bit. So we've got a last break of structure right there. Let's mark that out. We've got a current high here. That's a short term, we can see. Okay, we've got a long term further back as well. We have an area of demand. Prices bounce from. And we've had a big drop in there, but a big push back up. We drop down to weekly, see if we've got some weekly structure within that. And we do have a break to the upside there. Okay, so this became a break to downside. And that is the last break. So yes, that is valid supply we can mark up here. Again, just like all those other pairs we've seen how price has been shifting from demand to supply. So we could still pull up into that supply and then run for the week low, which is still this low. Now, when we go down to daily, let's go into that daily. So there's our swing move, there's our internal move. And if we go closer into the current price, we've had that break here. So we've just shifted back through that high. We can mark out on a 4-hour time frame. And then we've swept this low here on a 4-hour. So we haven't yet closed through liquidity area. If we look at the previous supplies removed, so if we go down now to a 4-hour, you can see the last breakout. We really want to see price breaking through this low before we can make any more decisions. If we get it closed through, then we've got a bearish bias again. So for me at the moment on this pair, I'm going to just leave it as it is. We're not going to do any more markups. I want to see really price closing down through that low or to continue higher and breaking through that high. I'm not interested in looking for a trade at the moment until I see one of those happen. So the next pair is the Audi New Zealand. Okay, so let's have a look at how price has been moving Very, very sideways there in the market. Let's look at the last swing move. We could say we had this low, break up, and new high, break up. Let's just use this as our last high. Okay, this becomes my area of demand. You can see price came back into that demand. Okay, and we're looking for continuation up now to run this week high. So everything looks good. Looks like we come back. We're slowly heading back higher. We'll find on a weekly, we'll find some of that internal structure. So there's an area here of supply failed, higher low. So we can see this is a breakout right there. And then we're looking for this to run to the upside next. So we would have had an area of demand down here. Internal demand. And this would have been an area of demand as well, where we've seen prices holding from. So you start to see prices stacking at those areas. Now we didn't come back into this demand. Then we've broken out, but we did have this area of demand we can mark out. This is the demand that broke this structure high. And that's where price came back into. So it's important to understand the difference between those origins and those breakout points. So if we now see price closing through this high, we'll have then this is an area of demand down here with a continuation. And there will be a smaller demand zone that you'll be able to mark off at this area where we can see the potential breakout. Now remember, this hasn't yet broken out. Let's change that to wrong demand. It should be an internal. Okay, so we're looking for the continuation to this week swing high. And we're now looking for this week high to be run. It's been run, it just hasn't yet been closed through on that weekly, on a daily either. So we're looking at those areas where we could pull back into this demand or this demand if we do get that close higher. Now, if we look at where our 4-hour areas sit, there's my previous breakout on a 4-hour. That does mean this is going to be a 4-hour area, probably about here of demand. Price has bounced off it already. And if we go down to the 4-hour time frame, this becomes my 4-hour week high. So you can see we've come up to it, bounced off it, bounced out, gone higher. So we've made that breaker structure, just looking for a pull back into demand for continuation higher. So again, you can see how the internal, okay, the 4-hour is lined up with this current daily zone I marked as well. So it's all lining up nicely there. If we zoom into the current price of that 4-hour time frame, where's my last breaker structure? We had one. There's no higher low really there. There is an area of a rally-based rally demand. It's not the best zone to draw, okay, but really this is the closest we're going to get to the area where prices just bounced off. And if I just go down to, let's mark this off on a lower time frame first. Let's have a look on a 30. Okay, yeah, we can obviously see that area of demand is where prices bounced from. So we could still see a run for this week high. Okay, we could see a run up to that high yet from here. As we shift out, okay, we come down, we shift internally out here. We've come back into this area of demand, but I much prefer to see price shifting back into this larger time frame area, okay, for a buy. We're already broken out of this swing high. And again, to make it more simplified for you, this is a potential swing move to the upside. So we've broken out to the upside, and it even might have been this high. I believe it was that high, I think, from that low. Okay, so we have pullback, break to the upside, leaving this area of demand. Well, after breakout, you expect to swing pullback. So we're just looking for that reversal. So what you need to see now is a potential drop through, reversing, pulling back into new supply, and we start to see that pullback. And obviously we can still see a run higher as well for that high, but that's why we're looking for those higher timeframes to pull back. So that's the AUD New Zealand. Let's now look at the AUD Swiss franc monthly time frame quickly. So again, this is going to be my current low we're looking for price to run towards. Major swing break here to downside. Price has already come off this area of supply. So that is really the higher time frame. Let's look at the lower time frame. Let's just make sure that is set on a daily POS. So we're seeing these levels because we're not seeing them on a weekly for some reason. Okay, so now we're seeing them on the weekly. Price here, broke structure, came off this high. This is an area of internal supply where we've just bounced from. Now, since then, we've only, we did actually break out just there as well. So you can identify now how price made that pullback into this area of a drop-based drop, dropped down, made a low, another swing pullback into supply, broke out again. What does that leave? This area of supply. It's another area we could see a pullback to. Go to the daily time frame, and you'll see where these structure moves come from. Now, if we zoom in again, we can identify this was the previous 4-hour zone where it did hold price, bounced off, and then broke through. So this became a 4-hour internal supply mark off. Then we broke to the upside. This became an area of demand. I find it did get swept to the downside. This is also an origin zone of demand where we held at. So I'll mark this off. This one got swept. This is the breakout one, by the way. And you'll see that this was a previous breakout structure. But we are now daily, so 4-hour. And we're looking now for the continuation to run this high. And we go down to a 4-hour time frame. Now, if you're still here watching this video, I thank you for actually still watching this point. Okay, so you're going to get some great insights. Hopefully it's helping you make it more simplified for your trading. Now, if you are here still watching, just put one word in the description for me and just say simplified. I know you're watching to this point. I know it's helping you to understand the way to mark up those zones and those levels. So here's our swing move, broke out, come back into demand, started to go higher. We can quickly identify now on this 4-hour time frame where we see that sweep, shift of structure, we start to push higher. Right, so we can look at an area of demand, really where price is bouncing from is this zone, internal demand, and this was the high we're looking to be run. Okay, so that's all we're looking for there. Let's get rid of these levels. Now, we've got to that level, we haven't quite run through. So let's look at the closer movement. Well, the last breakout was right here that we can mark off. And this created an area of demand where we can see a pullback into for final push higher. Let's drop down to 30-minute. And you'll be able to see this is a larger swing move where we create that breakout. We are looking for this high here to be run, which we haven't quite got to yet. Just mark it off. We failed to run it. We just front run above and we're pulling back. And we're looking for price to pull back to this demand. Now in this demand, we've got a nice swing low here of liquidity where we can look for price to want to run through. Potentially, we're looking for a drop in for continuation to run this high and this high here. So you've got a couple of swing highs to look for price to run. So that is the outlook on the Audi Swiss franc. Let's have a look at the final pair, the AUDCAD. We'll go to that monthly time frame. So the way we're looking at the movement here, we could look at this larger swing. This is a low, we're looking for price to run to. We could look at these internal movements. So break a structure, okay. Here to downside, break structure, broke to the upside. Then we just swept that low, okay, off the area of supply. So we went up, we swept that high, we swept that low. So you could potentially look at the price at the moment trapped between this high and this low. We're holding between. So you can see where price has swept that high, swept that low. So until we really see price getting out of this move, of this trading range, there's just no reason to look to trade this pair. Yes, we can trade from range high to low, which we have marked out. We can mark, let me get rid of that. I don't know what's going on there. So we can mark this out, high and low. But until we get out of that range, there's no real direction on this pair. If we drop down to the weekly time frame even, excuse the noise. So we look at this move, okay, on the weekly, we've got this larger swing back here, price pulling back. We look at this last move on the internal structure. This is where we can identify that sweep of that high. We've then broken here to downside, broken to downside. We've then broken higher. Okay, so you can start to see how the internal moves, broken lower. So you can see where this pairs, okay, to break higher. Then we start to continue lower, breaking lower again. Okay, broke lower. And this is how you can start to read price around those highs and lows in the market. So you've got this low down here, that range we're looking at, and this high up here, okay, where price is trapped within. Now within that, we're going to find that price is going to make those movements. Then we come up, we've broken higher again, and we've broken higher again. So internally, we are holding bullish there. We can identify this breakout area where prices bounce from. Okay, so that's my internal demand. I'm going to mark off. So we are looking like price is holding at demand internally. Now, like I said, this is the weekly, so we can still look to trade this, and we can look to continue to go with this move, going from this low where we see that sweep. Let's mark these off with a solid line so you can see the difference between the two. Okay, so we can still go with this movement to the upside. We look to continue up to this week high till we run the high of that range we're in. Now, if we go to a daily, it's going to be easier for you to understand and see where we've got that swinging move, and you're looking for price just to run up to this high. Now, for some reason, they have not come through onto the daily, so mark that off again. Let's go back to the daily. Yeah, so there's our current week high. And let's do that again. Okay, so I know this video has gone on for a long time, but hopefully you're getting some good value from this today. So we're looking for that continuation, right, to run up for this high. How can we now look for potential trading opportunities? So let's go down, we're on the daily. So on its inside, internally, we've also identified this area of demand where prices just bounced off. So that's going to be your 4-hour demand zone, you can see. So we're bouncing off an area of demand. Now, internally, we had a break up, we had a break here to the downside. So we can mark this off on a 4-hour time frame. Again, here we're just broken back down. So again, we can mark that off as a 4-hour. This then becomes an area of supply. So we're still bearish. Mark that off, internal supply, go back to the 4-hour time frame. You can see where price is bouncing off this previous demand on this swing move. But as we see the market dropping to downside here, okay, we can see we've got this area of larger supply where in theory this is basically going to see a swing supply, but we're looking to see if price can either push through from this demand through that supply, shifting back bullish, to continue to run, okay, for this high over here. Just mark that out again. Continue to run towards that high. Now, it's a large area, so you may want to start looking really for price to do this with better. If we see a push down, then shifting out of this high, pulling back, and then we can start to look to buy up to that high. This is quite a large zone you're looking at. We've bounced off this area of demand. Now we can look at internal price, where we just broken through. So we've broken out right there to the upside. We can mark this off as the breakout on a lower time frame. This becomes my area of demand. Now, in fact, that did, okay, bounce off with this one wick on this candle. And this was the break of structure to the upside. So mark that off. Not sure if it did that already. Let's mark it off if it didn't. Then we continue to be bullish. Then we reversed on that low. Okay, so we then pushed through bearish on that candle. Since then, okay, that means we reversed there. This became an area of supply that we can mark out. And we have our demand down here, where it's trapped between. So if we now go back, you'll see where price is holding at this area. We haven't quite got into that demand, very close. And now we've come back into this area of supply again. So you can see how we're trapped between those zones. So until I really see price pushing through, we can sell from this supply, buy from this demand area, but right now we're in the middle. So I'm just going to wait to see if price goes one way or the next. So from this area right now, we want to see price potentially going deeper into this demand or pushing through or bouncing off this demand to push through into supply above. That's the AUDCAD. So now we've got a few pairs left. Let's now do the New Zealand pairs quickly now, and then we'll take another quick break. So again, we can look at the larger view here where we see this break of structure. It's up to you if you're looking at the larger view or the internal swings. So we've got that breakdown. We had a previous year of supply where the market's come into. Okay, so we can see where we also swept this previous high right there of liquidity before we saw the move low. Now we haven't quite got to break this low. So let's go down to a weekly time frame and we can see where the structure was bullish. Case went bearish, pull back, just went bearish. We'll use this full swing. Yes, I know we reversed here. Bearish again, that we made a small reversal. Let's look at that full swing so we can continue to be bearish. Okay, and then eventually the market's just pushed above this high to make it bullish. So we have shifted bullish based on structure, and this is the high which gets reversed. And that means that it does create an area of demand down here, and that's where we could potentially see a bounce from. And then this becomes a weak high. Okay, so that's potential we're bearish, okay, on the larger swing there. Internally, potentially we're looking bullish. Now we have the internal move within this move down as well. We can identify that we've just come up to this high and we've swept that high. So we can make a liquidity sweep there. And now potentially we're running towards this low. So internal there, we have this area of supply that we can mark out where I see this break of structure to the downside, mark it off, and move down to 4-hour time frame, and you'll be able to see this. So this is where we're looking for a pullback now into this area of supply. Obviously, we've got a long way away from that area of supply, so now we can start looking at the lower time frames, see where price has been moving. So with this push up, we have a break of structure down here. And again, let's just quickly mark this off. This became the breakout area of supply, where prices come back into. Okay, and this became the origin of that move. Sort of about up here somewhere. So we've got the origin move and then the breakout move. Now as price broke down, then we've got this swing pullback with another breakout. As we make that breakout, we have a new area of supply that I can mark out. And you're looking at that potential pullback now, looking for this to be a weak low, and that's all marked out. So we're looking for the continuation with a bearish move. You can see we now look at the lower time frame where price has started to hold at those areas, okay, and continue to break structure. So all I'm doing now again is waiting for price to show me we're filling this area of this gap, looking for a pullback towards area of supply to look for a sell back down to run this week low. Now we can counter trend trade, but that is a completely different way to look at a trade. I'm just marking up quickly to show you where we're looking for your areas of structure and your supply and demand to make it more simplified. So that is New Zealand US dollar. Let's look at the New Zealand Japanese yen. Now with understanding, look at those yen pairs, we've seen the same thing over and over. We've seen the last break of structure to the upside and potential reversal. Now on this one, okay, so I'm going to look at this as a major break, more so because the way the market has made that swing pullback with a break of structure, creating this as an area of demand where we've created a bounce from. So let's mark this off as a week high, and this is going to be a break structure. Now we go to a weekly time frame. Let's look at that internal case. We have a break of structure here to the upside. We do make a pullback. I'm not going to use that. I'm going to look at that as one swing move. Look at that as a break to downside. And again, just like we saw in all those other pairs, we then have an area of supply at the high. Okay, so the market's not likely to come all the way back to that supply. We could still come at supply, but we're holding inside these areas of imbalances, and we could still see a run towards that week low. Now, if we just drop down to the daily, you'll see where we've got that drop down. We had this previous area here where we did break structure. So that's on my lower time frame. I'll mark that out as a lower time frame break. And then again, we've just broken out here again, just on that candle. And obviously we made this swing high where price is just swept. So we mark that out as a sweep. And our last area of potential demand is really down here where we can see a pullback too. Then we drop down to the 4 hour. Okay, so we can identify that the 4 hour has bounced off this area of demand. We broke the structural pullback, broke out again, swept the high. We could see a pullback, but we've got all this internal price action as well. So you're going to see that you're going to have these areas of demand like here where price is holding and bouncing out. That's the last demand zone that we can mark. That is going to be on my lower area on my chart. So now going down to the 30, you can see where this last area of demand here has been holding price. Okay, so we could still see a bounce all the way back up to run the week high. But if we break through this demand, then we can start to read these other demand zones as we drop towards that larger zone. Now, just go back to the 4 hour time frame. And we look at the current structure as we push down. Let's find a supply we can watch. So this is a break to downside, sweep the low, pull back, sweep the high, and then we've broken out again to downside. So very quick and easy. You can just look at those charts, simplify it all for yourself. There's the origin area of supply we can mark out. On the way down, okay, you have this area here you can mark as well. So it's a drop-based drop zone of supply. And then there is obviously this breakout zone of supply you can mark here as well, where price has basically just pulled back into. Going back to the 30-minute, you can then identify where we're bouncing off this area of demand. You've got a few supply zones above. This one has held price where we bounced off, and we could see a run lower. So you have these smaller trends, okay, moves within the larger move. It's all about reading your price action around those areas. So based on the Japanese yen, we're at an area of inside demand, internal demand here, but potentially we could pull back into this area of demand even. So the next pair let's look at is the New Zealand Swiss franc. Again, let's jump onto that monthly time frame and let's quickly mark this up. So we've got either this larger swing we can look at in the market where we had this high broke bullish. Then we can mark this off as a break to downside. Okay, and we can see a potential pullback now towards areas of supply. That's your larger swing. The smaller swing, you can see we were bearish, pushed down. There's a small pullback there, held at this area of supply, pushed down again, broke out again. Then we never came back to this supply, made this swing low, and we just about broken out once again. So you can use this as your current closest break of structure if you wish, or you could look at your largest swings. So if we look at this as the old closest break of structure, that means your closest area of supply is this zone here as a swing zone of supply for me. Dropping down to weekly is going to show me internal price action. So we can look at this as your swing move. We had a break to the upside here, break to downside, or you can even use this as your last break to downside. Which does mean this gives me an area of internal supply nested inside, okay, that area of supply I've just marked. So then I have this as a potential weak low. And we could see price still pulling back up before we see a run into that weak low. Let's drop down to a daily. Now the daily time frame. Okay, so with a break structure here to the upside that we'll identify. After that, we broke higher. Okay, from this high, we broke high again, broke higher, broke lower. Then we reversed back bullish. Then this low got broken to the downside just recently. Well, not recently, but you can see when we broke down here with this area of supply left over on the breakout supply, and you have this higher supply up here as well, which is that origin supply. So you have this internal movement and potentially looking for price to run towards this weak low. So we need to see really is a shift in structure if you're going to see a pullback any higher. At the moment, we're seeing this area of supply is where price has been holding. Now again, this is our shift of structure on a lower time frame. Now this area of supply has held on the lower time frame, and we'll mark that out as the internal supply. We broke out, okay, here to downside on this move. This was the breakout point, and we've just seen a sweep really of those areas. But then we can mark out this as an area of supply above that area where we're going to see that sweep. And let's mark that off, that low. And that's your internal supply. This becomes a potential weak low. So you can see where, just mark it out, where we had that push away, pull back, push up higher, broke that structure, pulled back. We did break structure, came up, swept that high, and we're looking for a run lower. So this area was a supply, but it's been swept through higher, okay, sweeping this high of liquidity into, I'm going to go down to 30-minute, to the supply above. And that's where you're going to find those bread and butter trades. These areas of liquidity being swept, though equal highs, swept above into supply, now looking for the low to be targeted. So I'm just looking now for that continuation to take out that weak low. Now you can go even lower here, looking at the lower time frames, but that's how you can quickly identify where price is heading. So that is the New Zealand Swiss franc. Okay, the final one in New Zealand is New Zealand CAD, and then we're going to take another break. Zoom in. Okay, on this approach, I'm going to look at this as a last major swing break, leaving this as my weak low. Okay, very quickly identify. We have the drop-based drop. We have this sweep of this high into this area of supply that we can mark out. Now again, this is a drop, pullback, continuation, internal supply area. And then we obviously swept this liquidity on doing so. Now we can look at the weekly time frame for an internal pullback. So you can see this is in fact a break of structure to the upside again. That does create an internal area of demand sitting down here. Why? Because this was the break of structure on the internal structure. And then this became our current week high. But as we're coming out of this era of supply with a sweep, potentially we're expecting a pullback, okay, at least to this demand at the moment. Now we did come back lower, then we shifted back bullish, and now potentially we could see a push lower once again. So we go down to daily and we'll look at the current move. So this was a break to downside. So let's mark this out quickly. Another break right there on that bearish candle. That gives me another break lower. And this becomes another break structure. And just showing you how I'm mapping it out quickly. Another break structure. And then this is my current area of supply. My closest supply that I can mark. It's all I need. I don't need anything else marked. My closest area of demand is this demand zone. Okay, so we have demand. Now we drop back to that 4 hour, or down to that 4 hour time frame. See where we had that shift to downside in structure. And we're just now looking to see if this area of demand is going to hold price to send us back up to this area of supply, all the internal areas. Now, also we can go down to a lower time frame to judge when we're going to see that reversal. So we have this break here to the downside of structure, which left this area of potential drop area of supply. Let's mark that out. And we do have a sweep of the low as well. Now, potentially this could be a break of structure on a lower time frame. We'll have a look at the moment. Let's just mark it off as a sweep. Let's drop down to 30. So it is a break of structure, more so to downside on the lower time frame. But we still haven't come into this area of supply above. We've created some equal highs, which creates an area of liquidity. And I've been more so looking for price to run up through those highs to fill these imbalances there, to then see a continuation to run the week low once again. So right here we'd have another week low that we can mark off. So that's what I'm looking at on the New Zealand CAD at the moment. Yes, we are inside demand. So to be honest, any sales from here, you've got to watch closely as we come back towards the demand. Better would be to see a shift of this era of structure to start seeing higher lows, and we can start to look for that pullback phase. We just shrink the market down. You can see we've got the era supply above. So that is the New Zealand and those AUD pairs. Okay, we're going to take another short break before we move on to the final pairs in this 28 pairs we've been going through to help simplify your trading with the supply and demand and market structure. Let's now go on to the next pair, which is the US dollar Swiss franc. And let's go through what this market's been doing. So straight away, let's look at our previous break structure. Now you can either use this as your break of structures to the downside, okay, the largest swing move to the downside, or you can look at this as your internal break to downside. And this is going to be your week low in the market. So then that gives you a couple of supply zones. You can see this is an area of supply where we have had a reaction from, and also this would be your higher origin area as well. So you can see we've got a couple of supply zones there we can mark. Now we failed to run this low, which does signal that maybe you're going to find a push through this supply back up to this zone before we see another drop lower. Let's go to a weekly time frame. Now remember, this structure here that we've got marked out is going to be more of a internal structure, then this is going to be more of your swing move. So what you can look at here ideally is that this becomes your internal area of supply where we had that bounce from, and you're expecting from this point to see price running this low. So as we see the shift of structure, to mark it out to the upside there, okay, that was a bullish shift of structure. This then became the shift back down. Okay, quite simple. That's why we have this. And then this becomes also the internal and the swing week low for me. Now, like I said, we could see a run higher to remove this internal, then we start pushing higher back towards this swing area of supply, which would be a good area to look for price to run through, then make a pull back to continue higher. Currently, what we're seeing though is this internal drop in the market is right where price is now sitting. So again, we can mark this off as an internal supply. Let's drop down to the daily time frame. And if we go into the daily chart, we can start to track where price is bouncing from. So we have this is an area of, in fact, this will be my area of demand. So we have an area of internal demand. I'll mark there on the 4 hour. The last break of structure is right here. Okay. And drop down to that 4 hour time frame. This is where we can identify that break of structure. And we're now pulling back towards demand. So yeah, we could quite easily see another bounce, okay, off this demand for another run high to run this week high. And we could see that continue to push through this structure. Okay, so we just zoom out. We've got this area of previous supply where we had that reaction. Okay, we've dropped down. We've come off this area of supply currently where we now sit. And we'll be looking for a reversal. So if we saw a reversal out of this structure, then we're going to create a new area of supply to pull back to start seeing a move lower. That's when you have to look for that shift in structure. So we just go back up to daily. Like I said, we need to really see if we're going to create that higher low and push through this area of internal supply to go back up to this swing supply, or if we're going to shift back out here to run lower once again. And that is where we can use the 4 hour to determine if we're going to see that shift of structure. So currently the lower time frames, this is our 4 hour. We can look at this as a break, and a break, and then let's mark this one off. That's a break of structure to the upside. Okay, then we had another break here to the upside. Mark it off. Our current demand sits here, but it's an area of potential liquidity what we could see run. So that's my area of demand from that previous break of structure. So we got an area of demand here as we saw price shifting out. Now we'll be able to see how that is holding price. We have another area of demand here, which price hasn't actually bounced out of, but we could see this low acting as an area of liquidity on this 4 hour time frame and on the lower time frame, okay, to be run through. So we go to 30 minute. As we pull back into that demand, there's that low I'm referring to. Could act as an area of liquidity for price to run through to fill the imbalance below into this area of demand. Then we may see another run higher towards this week high. So that's the outlook looking at the US dollar Swiss franc at the moment. If we push through all these demand zones, then we're going to see a shift in that structure and we potentially start seeing it selling off. So US dollar, Japanese yen. Let's go to a monthly and have a quick look. Okay, so very similar to the rest of those Japanese yen cross pairs. So there's my previous break to the upside. I can identify then this is a strong area of a demand zone, which is actually the, just find that swing demand, which is where we see the origin of the move. We then came back, okay, to sweep this low. Let's mark that out as a potential liquidity run after creating this swing high. So this becomes a new potential swing high. And if we go down to a weekly, we can start looking for that internal structure. Okay, so we have this sweep through. My internal structure, this is going to be, okay, we broke down, shifted bullish, 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 pulled back, went bullish. So that's my last break to the upside. This is my last break to the downside. So we can mark this out as the push lower, pull back, continuation. Again, another push to the downside. And then we've physically pushed back up to reverse that structure. And we've created this new area of demand that I can draw right here as the market's pushed out. So we have internal demand. Let's go down to daily, and you can identify now that this is going to be week high, where we're looking for, after this break of structure, for a pull back into demand for the next run higher, and potentially to run this swing high as well. So if we now look at the daily closer within, we can identify this our last break of structure to the upside, that smaller break. Then we can mark out this is a current area of potential, okay, demand. Now that is a tested zone on the way out. So we broke out here, come back, tested that demand, and we broke out again. And we've come off this area of demand where price is now already bounced off. Okay, so just make sure that's the right demand. Let's go to the 4 hour. So that's the area of demand. At the moment, we have this previous demand down here that we would have seen, just marked out, where we had that bounce. And this is going to be your current week high, where we're looking for price to run. Okay, so we're looking now for this demand to hold, okay, to run up to this week high. And if we shift through that demand, we could then start seeing a shift in structure and to start to see the potential pullback towards this area of demand here. So if we consider what could happen, we need to watch how we react now at this area of demand. Again, we have some lows here in the market, equal lows, where we could see price running through, okay, into this area of demand to fill the imbalance below before we see another run for this week high. So now let's look at the smaller time frame within here. Okay, we had a break of structure here to downside, break of structure, broke back higher. That has left this area of demand on a lower time frame where price is now holding within. So potentially we could still see a bounce off this area, and we could see price then want to run for this high, which is within this last move. Okay, so this is going to be very easy to see, so we drop down to lower time frame. So we've got this one here. We're going to remove, it's not the correct one. So you identify we've got this area here in the market where we're now sitting within. That's understanding that we had that shift out, okay, of structure. I believe it was this one here. We're coming back into the area of demand, but potentially we could go deeper yet, running through these lows, okay, into this area of demand below. But for understanding the structure itself, we are bullish, okay, on all structures. Go to that 4 hour again. We could run deeper into this 4 hour demand, or we could simply hold at this area of demand and push for this week high. But at the moment, it doesn't look strong, not a strong demand, because we continue to push deeper. And I expect to see this area of demand to be removed. That's the US dollar, Japanese yen. Next pair is the US dollar, Singapore dollar. We'll jump to the monthly time frame. And once again, my last break of structure I'm going to look at is this last run to downside. It's the closest area to look at. Yeah, previous break just there. This is the origin move where we could mark an area of supply. We did have a reaction off that supply already. And then we have this as a breakout zone of supply where we now pull back into. And that gives me a weak potential low. We could see a continuation to downside. We drop down to the weekly. Okay, we've got any internal structure. We shifted out, went bullish, bearish. You could look at that as a shift, but I think we're going to look at this as the weekly area. Potentially internal supply within. We're now coming into the area of supply. Let's drop down to daily. Okay, so now what we need to see is a shift of structure in the lower time frames. We can see identify here is a sweep into that area. A liquidity push up. Now potentially this could be a break of structure in the lower time frame. We had a break of structure here to the upside on that 4 hour. Okay, so this is going to leave an area here of potential demand. Just mark that out so we can see where it is. This could be a close through on a 4-hour as well. We'll mark that out as a 4-hour and a potential area of demand. So it's an area we expect to see price running through. If we just go to the area, let's look at this area here. Is this a previous sweep of this liquidity, this high? No, it's not. It's just below. So this area of supply that we can mark out here on the 4-hour time frame is where prices bounce from. So if we now drop down to the 4-hour, all this will line up. And there's the area of supply where price is basically held at. And we're bouncing or coming back now towards this area of demand. So we've either got to look now for a shift of structure. So we want to see a push through this low of this area of demand. Okay, we've got this pullback continuation. You see the break here on this candle. It's only a sweep on the higher time frame, but on the 4-hour you can see the breakout. And if we break through, pull back to new areas of supply, then we can start to see that shift bearish out of this higher time frame area of supply. So we start looking at the lower time frames here. Okay, we have a potential break of structure we can mark out right there. We pull back, continue higher. So let's mark that off. This then breaks lower, and so now we have a bearish bias. And again, we can mark this out as a potential area of supply. On the lower time frame, we don't need to mark the full zone, but we've marked it off there. Go down to 30 and you'll see exactly where we had this break of structure. So what we're looking for now is the continuation from here lower to run this week low. We've had this drop out, pull back in, sweep within. Okay, already come out of this 4-hour area we've got marked. Sweep here within those highs, and then we're looking for the drop for this week low. So that is the US dollar, Singapore dollar. Next, let's look at the CAD Japanese yen. 3 more pairs to go through. I know it's been a very long video. I do hope it's giving me some great value now. Not very often we do these types of videos. If it's something you want to see again, then please let me know. Okay, no scripted video here, just walking through price charts. So we have another break of structure we can mark here. And straight away, this becomes my week high. And this is exactly the same as we're seeing all those other cross pairs. Area of demand, we didn't quite come into that demand. We have bounced out of the area of imbalance. And if we look at the weekly time frame, I think we're going to see that structure giving us a new area of supply. Yep, exactly. So we have an area of supply that we can mark once again at this high. It's going to be the internal supply. This then becomes our current week low in the market. And this is going to be a break of structure to the downside. That's where we see a shift out. Obviously, internally, if we go to a daily, we're going to start to see where price is currently bullish. So we had this high. Actually, we've actually held at that high at the moment. So this is going to be my 4-hour supply where we're currently holding at. So until we actually remove that supply, we're still bearish. So we dropped to a 4-hour time frame. You can see we're still holding at that area, and we can mark this out as potential low to be run. We can actually mark that out as a swing low. Where are we? So we're looking for price to drop out of this area. Now, how do we look at this? We can look at this with our structures again. This high was just a sweep of the high, so it's just a sweep then for our high. This is actually the break of structure. So we mark that out as an IBOS here. And this created an area of potential demand, which would be run through. So we can mark this off. Okay, this is a sweep or it's a run through. We'll have a look at the moment. Let's just mark this off as a potential sweep. In fact, let's mark this on the lower time frames. And this one as well. We'll mark this on a lower time frame. And we'll mark this out as a break of structure. So this could be an area of supply. We've got swept. Let's just go down to 30. We'll see what's happening. Otherwise, it's showing me sideways price action. So we did break through to the upside. we then pushed through this demand, and that would have left an area of supply that we could have marked here somewhere. Okay, that's been run through. Understanding that this sweep is to hold, then we're expecting price to run for this low. That's all we're looking for now, is for continuation down on this pair to run this week low. That's what we're looking for price to do. Let's have a look at the next pair. That is the CAD Swiss franc. Monthly time frame. Let's quickly go through this. So quickly we can do this one single pair. So we can identify a larger swing, break here to downside. Let's mark that off. BOS. That's leaving this as an area of origin. Okay, mark it off. Probably we've got a retest. There's the origin retest of that area of supply. You've then got the next drop retest as well. And eventually this is the breakout area of supply, which then also retests price. So you can see how we retesting the area of supply all the way down. This can be the swing low, looking for potential pullback. Okay, and this would be a tested zone. So this would be where we have your supply above. Now we also have, let's have a look on the weekly time frame, see about the structures. So we have this sweep of this high. There's a break of structure. So let's mark that out as a break of IBOS. There's a small break there. Let's just ignore that and we go straight to the breakout because we had that move up. Prices then come off this area of supply. Just tested into that internal supply. So let's mark it out. This, in fact, right, this is a cluster of candles, so I most likely have it marked like this as a swing zone. So we retested that area of internal supply, broke the structure. What does that leave me? It leaves me this new area of supply that we can pull back to. Okay, so we look for price to pull back to supply to continue to run lower. Now if we go to the daily, we'll be able to see this better. And again, let's look at our current move in the market. So our last break of structure is this move here to downside. And just for your, if you want to understand how I mark all this out, then this is all shared within the Novice Pro Mastermind, which is part of the 90-day profit trading system, which you can join the waitlist if you're interested. The next enrollment will be opening at the end of January next year. So let's mark this off as our, what we're on now, internal area of supply. And this will give us our 4-hour time frame where we can see we've actually broke this structure here, come back up into that area, and we've actually held. So now let's look at the internal structure within. We've had this break to the upside, which we can mark out. And then this leaves an area of potential supply, demand. If we reverse this area of internal demand, we can drop now to the 30. If we push through this area of demand, then we're going to reverse structure and we could potentially start to see a bearish move. We could as well hold this area of demand though, and we could see a push higher to run this high. Now remember, all of this analysis I'm going through, showing you marking this up, you need to be doing this yourself. It's for educational purposes only. It's not intended as financial advice in the markets. So please make sure you do your own analysis. But I do hope this is giving you great value going through these charts as I've been sharing here today. So that is the CAD Swiss franc. The final pair is the Swiss franc Japanese yen. Okay, then we're going to be able to wrap this video up. It's been a very long video, but hopefully you've got some good insights. And if you've enjoyed this type of video, no script, straight through, just going through the charts, listen to my voice telling you about what I'm looking at. If you've enjoyed that, then let me know and we'll do more of these in the future. So this is going to be a break to the upside. Okay, so it's not the prettiest of price action. We do have a small there, a small move there. This is probably going to be the easiest to see. There's nothing really there. We do get a sweep of the low, so I marked it off as a liquidity sweep. This still becomes a potential weak high in the market. There's nothing that great there to look at the moment. So let's look at the swing here. We do have this breakout, swing break. So there's nothing major screaming at me at this chart. I would say this area of potential demand is where we saw that bounce from. So that's my internal demand area. And we're just looking really for continuation of the internal and the swing structure to the upside. So that's what I've been looking at the moment. If we look at the daily, we can see where prices shifted bullish, but then we broke out, we then broke bearish. So we've actually had a reversal, and let's mark this off as a IBOS. Continue to push lower, and then so we mark this one off. I don't think we did, and this is the last break to the downside, and we can mark our area of potential supply above. Okay, so that's my 4-hour supply. Now if we look here to the left, we do have this area of balance with a previous high above, but we haven't run above that high yet, so it's nothing we're going to look at. We're just making a pullback, and if we go to a 4-hour, we can see how price is making this pullback. Last breakout, so we're just looking really for the continuation of this pullback. Okay, it's not actually a great area to sell from, but there's a good area to sell with this trend. We're with this 4-hour trend at the moment to be bearish. If we're looking where price can bounce from, well, we do have this as an area of potential demand, where we're now bouncing from. So after that demand, we have another demand zone that we can mark out right there, where we could see a run to. So we mark that out as a internal demand. We're bounced off this area of demand right now, okay, where we could see the pullback to this supply to run for this next demand below. So that could be a good looking sell from this area. Okay, you look for your entry to run the low and into this area below. Now I'll be looking for lower time frame entry here. If we're looking at the lower time frames, the last break of structure is in fact right here, and mark it out, and we have an area of supply sitting here. So to get up to this supply, we're going to run through this lower time frame zone first. So drop down to the 30. This is my last break of structure on a 30. This becomes my current week low in the market. We're looking for pullback. We do have a nice area of liquidity sitting there on the pullback move. Mark that out. Into even, okay, to fill these imbalances, then we also have these swing highs where we can run into this area above. So to start with, I watch to see how price reacts, if we can push through these highs into this supply to see if we get a sell back down for this week low. That'll be the first thing I'll be looking for in the Swiss franc Japanese yen. And if you want to find out more on the profit trade workshop that I mentioned in the beginning of this video, I said there'd be a link popping up right now for you to check that out. And make sure you watch the next video coming up, which will help you understand more on supply and demand.